Welcome back, everyone, to another deep dive. Today, we're going to get into something that I think a lot of Forex traders struggle with, and that is FOMO.
Yes.
Fear of missing out.
That's right.
It's, we hear about it all the time in trading, but especially with Forex.
Right.
Where things move so quickly and, there's so much leverage involved.
Yeah, and that leverage is a key ingredient. When you think about FOMO and Forex, because you see these massive potential gains, and you think, oh my gosh, if I don't get in on this right now, I'm going to miss the boat.
It's that fear of regret, right? I mean, we all feel it in different areas of life.
Absolutely.
But when you add in, potentially large sums of money,
right,
it gets magnified, doesn't it?
It does, yeah. You see a currency pair taking off, and all of a sudden your carefully crafted trading plan feels like it's moving in slow motion, and that's where those classic FOMO mistakes start to creep in.
So give us an example. Let's say we're looking at a trade.
Right.
How does that actually play out?
Okay, so let's say you're watching the euro, and you start to see some rumors flying around about a potential interest rate hike. Suddenly, everybody's talking about it. You see those charts lighting up, and you start thinking, if I don't buy euros right now, I'm going to miss out on this massive move. The FOMO takes over. You buy in at a price that's already been driven up by all the hype, and then what happens?
It crashes.
Well, the rumor turns out to be false, or maybe the rate hike is smaller than expected, and the euro drops because you bought in high on that pure emotion. You end up selling low out of panic.
Ouch. That's the classic FOMO trap.
Yeah.
And with the leverage we use in Forex, that can be really painful.
Exactly, and it's not just about the financial hit. FOMO can really mess with your head. You start to second guess your judgment, your strategy, your whole approach to trading.
Right, because it undermines your confidence.
Yeah, and that can lead to even riskier moves trying to chase those losses, which just digs a hole deeper.
So how do we break this cycle? I mean, we all know we need a trading plan.
Of course.
But what should be in that plan specifically to help combat FOMO in Forex?
That's where technical analysis becomes crucial. Instead of getting swept up by the rumors and the chatter, you're relying on those objective indicators. Things like moving averages, RSI, MACD.
So it's like having those X-ray glasses.
Yeah.
That can cut through all the market noise and let you make decisions based on data, not just emotions.
Precisely. You're not relying on your gut feeling here. You're looking at hard data to make informed decisions.
Okay, so we've got the technical analysis as our foundation. But what about those moments when the market's going crazy and you're feeling that FOMO pull? How do we actually resist the urge to jump in when it seems like everyone else is making a killing?
That's where self-awareness comes in. You need to know your own personal FOMO triggers. For some people, it might be spending too much time on social media, seeing all those success stories. For others, it might be getting sucked into those online trading forums where the hype machine is always running.
Yeah, or even just watching those price charts tick up and down constantly.
Right, you get fixated on those short-term movements and lose sight of the bigger picture.
So step one is identifying those triggers. But what happens when those FOMO alarm bells are already ringing? What are some tactics we can use in those moments to handle that urge?
Well, one thing I do is actually visualize those FOMO trades going bad. It's like creating a mental highlight reel of all the times I bought into the hype and got burned.
So it's kind of like scaring yourself straight with Forex charts instead of scary movies.
Exactly. It helps to remind me of the potential downside, the real risks involved. And then I try to flip the script and visualize sticking to my plan, making calm and calculated decisions.
So it's about shifting your focus from what you might miss to what you could potentially lose if you let FOMO take over.
Right, because at the end of the day, it's about protecting your capital and making smart decisions that align with your trading goals.
Makes sense.
Another helpful technique is actually reducing your screen time. If you're constantly staring at charts, watching every little price tick, it's easy to get caught up in the moment.
Especially with Forex where things move so fast.
Exactly. You can feel like you're missing out on opportunities every second. Instead, step back, take a break. Look at the bigger picture. Focus on your weekly or monthly goals, not just what's happening in the next 5 minutes.
That's a great point. It's like zooming out on a map so you can see the overall direction you want to go, instead of getting lost in all the little side streets.
Precisely.
Now, let's talk about risk management, because that's crucial for any Forex trader, but especially for those who struggle with FOMO.
Absolutely. Having a clear plan for how much you're willing to risk on each trade helps you stay grounded.
So even if you do get caught up in the moment and make a trade based on emotion, at least you've got those guardrails in place to limit the potential damage.
Exactly. Think of your stop-loss order as your FOMO safety net. It takes the emotion out of those exit decisions and helps you protect your capital.
And risk management isn't just about stop losses, it's also about position sizing.
Right.
Can you break that down for us? How does that relate to FOMO?
Well, when you're feeling that fear of missing out, it's tempting to go all in to try and maximize those potential gains. But that's also how you maximize your potential losses.
So even if you think a trade is a sure thing, you shouldn't risk more than a small percentage of your account.
Exactly, because no trade is ever a sure thing, especially in Forex. Sticking to a sensible position size based on your overall account and your risk tolerance helps you weather those inevitable losing trades without derailing your entire strategy.
That makes a lot of sense. So we've got technical analysis, we've got risk management, we've got managing screen time. What other tools are in that FOMO fighting arsenal?
One that often gets overlooked is the power of journaling. After every trade, whether it's a win or a loss, take a few minutes to write down what happened. What was your rationale for the trade? Did you stick to your plan? Did FOMO play a role?
So it's like a trading diary, but with a focus on those emotional and psychological factors.
Exactly. By tracking your trades and your emotional state, you start to see patterns. Maybe you notice that you tend to make impulsive decisions after checking certain websites or talking to certain people.
Or maybe you realize you're more prone to FOMO when trading certain currency pairs.
Exactly. It brings those subconscious patterns to the surface, making you more aware of your own behavioral tendencies.
Interesting. So journaling helps us identify those personal FOMO triggers that we were talking about earlier.
Right, and once you know your weaknesses, you can start to address them.
I like that it's like turning your trading journal into a self-awareness tool. It's not just about tracking profits and losses, it's about understanding why you make certain decisions.
Precisely, and over time, that self-awareness becomes your most powerful weapon against FOMO. You start to recognize those FOMO-driven urges before they take control, and you can choose to respond differently.
You know, I think one of the biggest challenges with FOMO and Forex is that feeling of isolation. You see all these other traders seemingly crushing it, and you start to doubt yourself, your strategy, your whole approach.
That's so true, and that's why having a support system is so crucial. Connect with other Forex traders, whether it's online or in person, share experiences, strategies, even just vent about those FOMO-fueled frustrations.
Yeah, it's like having a team of people who get it, who understand the unique pressures and emotions that come with Forex trading.
Exactly. And don't be afraid to seek guidance from a mentor or a coach. Having someone who's been there, done that, who can offer objective advice and help you stay on track can make a huge difference.
It's like having a personal trainer for your trading mindset.
Exactly. They can help you develop those mental and emotional muscles you need to stay disciplined, to focus on the long game, and to resist the constant temptation of FOMO.
All right, this has been incredibly helpful. But before we wrap up, I want to address something that I think a lot of traders, myself included, struggle with. And that is those times when FOMO leads us to make bad trades. We end up feeling discouraged, frustrated, even ashamed. How do we deal with that emotional fallout?
That's such an important point because those negative emotions, the self-doubt, the regret, can be just as damaging as the financial losses themselves. They can make us risk-averse, hesitant to take any trades at all, or they can push us towards even riskier behavior in an attempt to make back what we've lost.
So it's like this vicious cycle, FOMO, feeding on our fear and insecurity.
Exactly. And the key to breaking that cycle is to shift our perspective. Instead of viewing those FOMO-driven mistakes as failures, we need to see them as learning opportunities.
Okay, so it's about reframing those losses as tuition paid in the School of Forex Trading.
I like that analogy because every trade, whether it's a win or a loss, provides valuable data. It teaches us about the market, about ourselves, about our strengths and weaknesses as traders.
So instead of beating ourselves up over a bad trade, we should be asking ourselves, okay, what can I learn from this? How can I adjust my strategy, my risk management, my emotional response to avoid making the same mistake again?
Exactly. It's about adopting a growth mindset, embracing those challenges as a chance to improve our skills and become more resilient traders.
And remember, even the most successful Forex traders have experienced losses, have made FOMO-driven mistakes.
Of course.
They've just learned to manage those emotions and bounce back stronger.
Right, and that's what we need to focus on, developing that resilience, that ability to learn from our mistakes and keep moving forward, even when FOMO tries to pull us off course.
You know, it's interesting because we often talk about FOMO as this negative force, something to be avoided at all costs. But what if we could actually use FOMO to our advantage?
That's an interesting thought. How do you mean?
Well, I've heard some traders say that they use FOMO as a kind of early warning system. They recognize those feelings of urgency and excitement as a signal that something is happening in the market, that there's potential for a big move.
That's a really interesting perspective. I think there's definitely some truth to that. FOMO can be a powerful motivator. It can push us to stay informed, to keep learning to pay attention to what's happening in the market.
Right, so instead of letting FOMO drive us towards impulsive decisions, we can use it as a trigger to do our due diligence.
Yeah.
To analyze this situation to see if there's a genuine opportunity worth pursuing.
Exactly. It's about channeling that FOMO energy into a more disciplined and strategic approach. Instead of just blindly following the crowd, we use those feelings as a cue to dig deeper, to do our own research to make sure we're not getting caught up in hype.
So it's like FOMO becomes the fuel, but our trading plan and risk management strategies are the steering wheel and brakes.
That's a great analogy because without that control, without that clear direction, FOMO can easily send us careening off course. But with the right mindset and the right tools, we can harness that energy and use it to our advantage.
I love that. So to wrap up, I think the key takeaway here is that FOMO is a part of the Forex trading experience. It's going to happen. We're all going to feel it at some point,
Yeah.
but it doesn't have to control us.
Absolutely. We can choose to react to FOMO with fear and impulsivity, or we can choose to respond with discipline and strategy. It's about recognizing those feelings, understanding our triggers, and having a plan in place to manage those emotions effectively.
And remember, you're not alone in this journey. Connect with other traders, build a support system, and don't be afraid to seek guidance from those who've been there before. Because with the right mindset, the right tools, and the right support, you can navigate the FOMO-filled waters of Forex trading and come out on top.
Well said. And as always, happy trading.